SMF Street Traders, this is not your trading application. This is what the public people would look at. It's standard technical analysis versus your platform. So basically on the weekly level here, we're at about 89.52% overbought. Public is going to look at that. The bullishness is the 10-week crossed above the 20, and that's where the breakout happened, right above half of that weekly bar. The 50-week has been rising, has crossed over all movement averages during that base down here with that follow extension 3-week breakout. And basically when you held half of that weekly bar, just like you've been taught to do, that big breakout, 3 weeks of breakout occurred off of that half weekly bar. Whether it's a 3-minute bar or weekly or monthly, price action was held, and bam, that's where the breakout. Now we're extended, so what we're going to be looking at on Amazon is where this top end resistance over here failed. We're going to be looking for the reversal patterns like I showed you on your platform as MMTs. So basically I'm going to get into the call and put structure, and here we go. This is a $150 put, and Amazon.com closed at what price? I will give you the price. Amazon closing price on the equity side was 148.33, only up 20 cents on the day. Okay, the high was 148.98, closing within a little over 60 pennies, right in there somewhere. The low was 146.50, so we bounced off that left elbow bottom up. So we pulled back. We got that low at 146.50 there. $100 million of money flow was sold in Amazon. And basically you can see the money flow minus 100 million came out of the equity up there in that top. Okay, now that's the closing price of the equity. Here is the $150 put, which is $2 in the money strike price. I will give the MMTs the buy signals and the sell signals at price on here off of the videotape. You can see clearly here, once again, you're deflated over here. You're coming down. These contracts up here were just $40 not too long, $38 not too long ago. Right here on the top, they were $24. Well, they're getting awfully cheap down here. And the thing about it is, we can scroll down here and we can take a look at the value of where they're currently at. Okay, that was $27 high. That high there was $24.50 high. When they gapped down, this high here was $14.53. Now look at the high. The high here was $9.25. So guess what? We hit the low at $6. Right over here, this contract at one time was $39.05 on the put premium. The put premium has come down $33 from that high per contract. So that's that strike price, which is $2 in the money on Amazon. Now, vice versa, that's $2 in the money for the put side of the option. Whereas the call side, because Amazon closes at 148.33, that's $2 below the market, meaning that it's an up and out of the money 150 call. That's this right here. It says 150 call. And I will give them the trades. What they're going to look at right here is that the low of that call was only 27 cents. A lot of contracts, when they took, the calls were $16 back over here. They took all the premium out. This is where you buy deflated premium. We were doing this at the beginning of September. Yes, we were. This was a cheap side of the market to put that volatility trade. So these have gone from 46 cents all the way up to $4 or $5.05 right here. That's a big move for that 150 call, and we're finally losing lots of premium on this side of the market. This side of the market still has room to move depending on the trend on Amazon, which is that weekly chart that we did. So I'm going to give trades now to the MMTs on both the prices of the 150 call for entry and the 150 put side for entry and exits. Amazon.com, what we have here is up and out of the money call. We know that Amazon closed at 148.33. It's $6 up and out of the money. We also know that there was a time it was deflated at a low price of 23 pennies and a high price over here of $2.99, which is, it's inflated. It's not wholesale. This is when you buy the wholesale of the market for volatility and options, for that reason there. You make these big moves. On the other side, the 155 put, which I'm going to put in here for you, the 155 put option is right here. And basically, it's an October contract, but it's way down here at the lows so far. I will give you the pricing mechanism here on the 155 put off of the video, and on the 155 call, we'll have the pricing given out on these as well. Right now, I'm in an inflated and a deflated. I will give the lower pricing to a more deflated below the market price and an inflated top price in here again. And as volatility works its way out in these strike prices, we'll work our way through it. I'll pause the tape and give you the bids and asks. Back to the tape, SMF Street Traders, is that we're looking at the 145 Amazon put. We're looking at that deflated drop down here to this price level. This is the put option down here. Okay, see, it says 145 put. Amazon closed at 148. That's $3 below the money. So it's out of the money put because it's below the strike. Now, on the other hand, on this chart up here, this is the 145 call. Okay, and that's in the money call. So if Amazon doesn't go higher, let's say, I'm just giving you an example. I'm not saying that that's what Amazon's going to do Monday. We'll leave that up to the trading day. What I will say, though, clearly is that if we come down in price on the equity, naturally they're going to take premium out of the 145 call and add some premium to the 145 put. And as an SMF MMT market maker in the options pit, you're not trading day trading strategies and options and all of that public stuff. You're trading a market maker price action at both call and put prices. One gets extremely inflated to the upside, and one will get extremely deflated, as always in our trades. And I will be given the pricing on the 145 call and the 145 put off of the video. This is where we need to let you know that on this particular one right here, the lows on here were down at 63 pennies. And the low of that breakout right here on 8/29, when we told everyone to get long that volatility trade up and out of the money, they're paying good because the high right here is 790. And it was very cheap to be on that volatility side of the market. As we predicted, short covering a September rally to this was the August down. So when the markets, when we were short in August, all the calls lost all the premium all the way down here. These calls were way up here at $19.50. And in August, that's the way the trend went. The calls got the most deflated, and it was time to buy up and out of the money. Now we're getting inflated in the cycle there. The other thing you want to know on the same hand is that back over here, you can see that back over here, 7/18 week, we were way up there. But let's go to this last high 3 weeks ago. 3 weeks ago, that high was 21.30, and that wholesale bid now, that low is 3.85. So once again, what we do best as market makers in the option pit is we understand that trade relative to the equity side. We understand that call as well. I'm giving the pricing right now. I'll pause the video. SMF Street Traders, this is the $140 call that's in the money. So we are inflated over here, and the $140 put is also getting in this deflated zone. When this move started, the low was $1.19, and this current high in the 3-week trend on the high of the options, 11.47. So it's had a really big move. And on the other hand, the put option right here, there's the call right there. This put option down here has had quite a big movement down in 3 weeks, because we can see here where the high was 18.55 in the put, and right now the low is at 240. I will be giving pricing out on the tape now on both strike prices, 140 put, 140 call. SMF Street Traders, we've done. I just gave you all the pricing on the 140 call. We're going to conclude the tape. And we have a series of call and put side entries at wholesale prices versus retail prices, and plenty of opportunity in the trade management